We see continued migration trends to our markets that are very positive and supportive of driving demand. We continue to see very stable employment conditions. We continue to see very low levels of resident turnover move-outs to buying a home.
I'm here today with Eric Bolton, Chairman and CEO of MAA. How would you describe supply and demand trends and their impact on rent growth across MAA's core markets today and into 2024?
Well, clearly we have seen a pickup in the amount of new supply being delivered to a number of our markets. This is something that's been coming for some time as a consequence of the very low interest rate environment that we had over the past few years, and it's fueled a fair amount of development that is delivering into our markets at this point. But this is something we've seen in the past in prior cycles, and it's not something we're particularly worried about. The supply levels coming into the market are generally in the sort of 5 to 6% of existing stock, and it varies a bit by market. We see some markets more heavily supplied than others. But we're also encouraged by the fact that there's clear evidence mounting that new starts are really tapering off, and as we sort of work through the supply delivery for the next 2 or 3 quarters, as we get towards the end of next year, 2024 into 2025, the supply deliveries start to meaningfully moderate. Offsetting that, fortunately, is still continued very strong demand. We see continued migration trends to our markets that are very positive and supportive of driving demand. We continue to see very stable employment conditions. We continue to see very low levels of resident turnover move-outs to buying a home. We continue to just see a lot of continued behavior on the part of the consumer to want and looking for apartments. And so the net result is that the demand for what we're offering continues to remain quite high. And in fact, the absorption of apartments across our portfolio in the third quarter was pretty consistent with the level of absorption we saw towards the end of 2021, despite the fact that we saw a lot more supply coming into the market. So it's a long way of saying that the demand side of the business continues to hold up quite well.
And how is MAA positioned to cope with ongoing market financing challenges? And to what extent is the macro environment impacting your overall strategy?
Well, fortunately, we've got our balance sheet in a really, really strong position. Average maturity of our debt stack now is well over 7 years. Our fixed charge coverage, debt to EBITDA, has never been this strong in our 30-year history as a company. So we have a lot of growth capacity on the balance sheet that we are ready to put to work as new opportunities emerge. And that's really where our focus is at the moment, is looking for new growth opportunities that we think are going to be really value creative over the long haul. But no near-term financing issues or needs that we have at the moment, and continue to feel really good about where the balance sheet is positioned.
And where do you see the greatest potential for growth at MAA coming from in 2024?
Well, really, it's on a couple of fronts. Internally, we've got a number of new technology initiatives and similar agendas that we've had in developing for the last couple of years towards driving more operating efficiency from our existing portfolio that we think is going to continue to position us to grow operating margins off of our existing portfolio, and we'll be continuing to harvest some of that opportunity going into 2024 and beyond. And given the scale that we've gotten to, that's a significant amounts of dollars associated with that. And then beyond that, sort of back to the point I was just making a moment ago, we've got a lot of external growth capacity on the balance sheet right now. So we're actively in the market talking to developers. We do think a lot of this supply coming into the market is going to create opportunities for us to grow and to buy some of these lease-up projects that are delivering into the market. So we're looking for those opportunities pretty actively right now, and we think as we get into 2024 and beyond that there will be a lot of that opportunity that will start to emerge.